Our hypothesis is that the shifting consumer preference in eco-friendly practices will eradicate the fossil fuel-powered automobile industry, creating new demand for electric vehicles. With continuous growing trends in environmental, social, and governance, we hypothesize that this will lead to drastic increase in demand for lithium, nickel, and cobalt, which is at the center of productions of the BHP Group. Particularly BHP's nickel mine in Western Australia will play a major factor in the firm's performance. Furthermore, changing regulatory requirements such as sustainable finance disclosure regulation requiring firms to classify as ESG or non-ESG will deem the growing EV market ever more likely to occur. To establish the effects of the hypothesis further, I will now hand over to Yogi.
Expanding on our thesis, on a global scale of around 2.2% of electric vehicles make up the cars on the road. Despite this, the EV industry is currently worth an approximated $1.3 billion and is expected to grow by 24% over the next 6 years. Given that China is the largest and fastest growing EV market and producer in the world, where the dominant EV maker Tesla bases half of its manufacturing, we can assume that the demand for crucial minerals such as nickel, which is used in the production of an electric car battery, will increase, hence resulting in a greater export volume of nickel, which will ultimately increase the revenue of one of Australia's major nickel miners, BHP. Given these two firms sharing a few similarities, we're basing this assumption that BHP's nickel mine operation in WA and the recent agreement with Tesla for the supply of nickel will positively affect BHP's share price. Whilst the lower global demand for iron ore due to the ongoing Russia-Ukraine conflict and the strict COVID-19 restrictions slowing down infrastructure growth in China will have a negative impact on FMG's share price, hence why the sell recommendation. Now I would like to introduce you to Eugene, who will talk a bit more analytically about our buy recommendation BHP.
BHP Group is a company that mines the main materials for electric vehicles, which is nickel, and it is expected to increase in growth rate in the future due to the high demand on electric cars. As you can see this table above, it shows that the discounted cash flows valuation of BHP. Based on the growth rate and the free cash flows, we can calculate the estimated share price, which is $98. This expected share price is much higher than the current share price. As the current share price is $25, it can be seen as undervalued. Therefore, we recommend buying this stock since BHP is likely to grow further. The graph below shows the forecast tendency of net income, sales, and profit margin over the 10 years based on the assumption. This graph and table shows the relation between weighted average cost of capital and terminal growth rates. If the WACC increase and terminal growth rate decrease, the share price of the BHP will be reduced. It is much easier to understand of estimated share prices as changes in terminal growth rate and the WACC. Tony will discuss about selling recommendation of FMG.
The TC evaluation doesn't factor in the impacts of the Russia-Ukraine war, where it impacted negatively towards the demand for iron ore. Fortescue still has limited reach towards the EV market, and with the Russian-Ukraine war going on and COVID-19 slowing down infrastructure development globally, the demand for iron ore also decreased. More specifically, over 80% of Fortescue's iron ore revenue comes from China, and the nation has since decreased infrastructural development too, therefore shorting the world's largest iron ore producer. The sensitivity analysis accounts for changes in the terminal growth rate and weighted average cost of capital. We can assume that weighted average cost of capital will become larger as Fortescue increases its debt financing and increased loss of sales. Therefore, the share price will continue to fall and further justifies the recommendation to sell. Now I will hand it over to Marcus to talk about the investment risk.
Our thesis include consumer demand for electric vehicles being lower than expected, hence reducing the net income and value of the business, stemming from EV steep pricing due to research and development on leading-edge technology and COVID shipping port delays creating inflationary pressures, reducing aggregate demand. Furthermore, RBA's contractionary stance potentially receiving further increases to the interest rate in 2023 will lead to greater debt servicing costs and thus increasing the WACC, reducing share price of BHP. Finally, COVID recovery, creating large Chinese economic rebound, may diminish the effectiveness of recommended bearish position on Fortescue as iron ore demand will increase, as China accounted for roughly 75% of iron ore imports.
Thank you for listening to our short presentation.